When you think of Switzerland, what comes to mind? Is it the towering, snow-capped Alps? Perhaps it's the world-famous chocolate or the precision of a Swiss watch. For many, however, the first image is that of a bank. Not just any bank, but a Swiss bank. An institution wrapped in an aura of mystery, security, and immense wealth. It's a reputation built over centuries, cemented in law, and whispered about in conversations about power and money across the globe. But how did this small landlocked nation, known for its political neutrality, become the world's most trusted safe deposit box? The story isn't just about numbers on a ledger. It's about history, war, and one of the most powerful ideas in finance: secrecy. The connection between Switzerland and banking is so strong it almost feels natural, as if the mountains themselves were designed to be vaults. But this global financial powerhouse was born not from natural resources, but from a deliberate cultivation of stability and discretion. In a Europe constantly rocked by political turmoil, revolution, and war, Switzerland offered something incredibly rare and immensely valuable: a promise of peace. It positioned itself as an island of tranquility in a sea of chaos. This reputation for staying out of conflicts became the very foundation upon which its banking industry would be built, attracting capital from those who feared losing everything in their volatile homelands. It was a simple, yet brilliant, business proposition. This unique national identity did more than just attract foreign money. It shaped the Swiss character, and by extension, the character of its financial institutions. The Swiss value precision, privacy, and reliability, qualities you see in their engineering and craftsmanship, and qualities that are absolutely essential for a banker. A client entrusting their life savings to a Swiss banker wasn't just buying a service. They were buying into a culture of meticulous care and unwavering confidentiality. This cultural alignment between the people and their most famous industry created a powerful synergy, making Swiss banking synonymous with a specific set of unimpeachable values that resonated with the global elite. So, the image of the impenetrable Swiss bank is more than just a cinematic trope. It's the result of a carefully constructed national brand. It's a story about how a country with few natural advantages leveraged its political neutrality and cultural identity to become an indispensable player on the world stage. We're going to pull back the curtain on this secretive world. We'll look at how these banks started, how they operate, and why, even in an age of digital transparency, the allure of Swiss banking remains as powerful as ever. The journey begins not in a modern glass tower in Zurich, but in the tumultuous history of early modern Europe. The origins of Swiss banking are deeply rooted in the turmoil of European history. Long before numbered accounts became legendary, Switzerland's story as a safe haven began. Back in the 17th and 18th centuries, Europe was a continent in constant conflict. Religious wars, particularly in neighboring France, drove waves of wealthy Protestant Huguenots to seek refuge. They fled with what they could carry: gold, jewels, and capital. They needed a safe place to store their wealth, far from the reach of kings and armies who might seize it. Geneva, a Protestant city-state at the time, became a primary destination. These early bankers weren't operating out of grand buildings. They were merchants and goldsmiths who started safeguarding assets for these refugees. This initial role as a sanctuary for persecuted wealth laid the groundwork for a more formalized system. The Swiss learned early on that their political neutrality was their greatest economic asset. While other nations built empires through conquest, Switzerland built its influence by promising to protect the assets of citizens from all sides of a conflict. It was a radical idea. Instead of taking a side, they offered a service to everyone. This principle became the bedrock of their banking industry. The bankers of Geneva and later Zurich and Basel understood that their promise of security was only credible if it was absolute, maintained regardless of the political winds blowing across the rest of Europe. As Switzerland's reputation for stability grew, so did its client base. It wasn't just refugees anymore. It was European aristocrats and royalty who saw the wisdom in diversifying their holdings. They kept a portion of their wealth outside their own kingdoms as a form of insurance against revolution or political collapse, a very real threat at the time. A Swiss bank account became a contingency plan, a financial escape hatch. This influx of foreign capital helped the Swiss banking sector grow in sophistication, evolving from simple safekeeping to offering more complex services like investment management and financial advice, all conducted with the utmost discretion. The real test, and the moment that cemented Switzerland's status, came with the world wars of the 20th century. As Europe descended into chaos twice in 30 years, Switzerland remained neutral. People from across the continent, fearing hyperinflation, government seizure, and the destruction of war, desperately sought to move their money to safety. Switzerland was the obvious choice. It was geographically central, yet politically detached. This period saw a massive flow of capital into the country, confirming its role as the world's preeminent financial sanctuary. The Swiss had proven that their promise of security wasn't just for peacetime. It held firm even when the world was on fire. While neutrality provided the foundation, the defining feature of Swiss banking, its legendary secrecy, was formally enshrined into law at a critical moment in history. For centuries, Swiss bankers had operated under an unwritten code of discretion, a professional ethic passed down through generations. But this informal promise was put to the test in the 1930s. As the Nazi regime rose to power in Germany, its agents began trying to pressure Swiss banks to reveal information about the assets of German citizens, particularly Jewish citizens who had moved their money to Switzerland for safety. The German government declared it an act of treason for its citizens to hold foreign accounts, and they wanted the names. In response to this foreign pressure and to protect their clients and their industry, the Swiss government took a monumental step. In 1934, they passed the Swiss Banking Act. This law made it a criminal offense for a bank employee to disclose any information about a client's account to anyone, including foreign governments, without the client's consent or a Swiss court order in a criminal case. This wasn't just a regulation, it was a powerful statement. Switzerland was drawing a line in the sand, declaring that the privacy of a bank account was a fundamental right it was willing to defend with the full force of its legal system. This law is what created the modern concept of Swiss bank secrecy. This new law had an immediate and profound impact. It transformed Swiss banking from a trusted service into an impenetrable fortress. For anyone living under an oppressive regime, facing political persecution, or simply wanting to keep their financial affairs private from prying eyes, Switzerland now offered a legally binding guarantee of confidentiality. The law turned secrecy into Switzerland's primary export. It was a unique selling proposition that no other country could match. After World War II, as the world entered the Cold War and global instability continued, the demand for this level of privacy skyrocketed, attracting wealth from every corner of the globe. Of course, this ironclad secrecy also created a dark side. While it protected the assets of legitimate individuals and victims of persecution, it also became a magnet for those looking to hide ill-gotten gains. Dictators, tax evaders, and organized crime figures were drawn to the same anonymity that attracted everyone else. This has led to immense international pressure on Switzerland over the decades, forcing the country to walk a fine line between upholding its tradition of privacy and cooperating with international efforts to fight financial crime. The era of absolute, no questions asked secrecy has evolved, but its legacy is what built the industry we see today. So, how do Swiss banks actually make their money? While the image of vaults filled with gold bars is iconic, the reality of the modern Swiss banking business model is far more complex and, honestly, much more lucrative. The core of their operation revolves around two key areas: private banking and wealth management. This is not the same as the retail banking most of us are familiar with. Swiss banks specialize in serving high net worth individuals, people with millions or even billions in investable assets. These clients aren't just looking for a place to park their cash. They require a sophisticated suite of services to manage, grow, and protect their immense fortunes for generations. The first major revenue stream comes from fees. In wealth management, the bank acts as a financial custodian and advisor. For an annual fee, typically calculated as a percentage of the total assets under management, the bank's experts will create and manage a global investment portfolio for the client. This includes investing in stocks, bonds, real estate, commodities, and other complex financial instruments all over the world. They also provide services like estate planning, tax optimization strategies, and philanthropic advising. The goal is not just to preserve wealth, but to make it grow faster than inflation. And the bank earns a steady income stream simply for managing this process. Investment banking is another critical pillar of their business model. Major Swiss banks like UBS and Credit Suisse, well before its acquisition, are global players in this arena. They help large corporations raise capital by underwriting stock and bond issuances. They advise on mergers and acquisitions, helping companies buy, sell, or merge with other businesses. These are high-stakes, high-fee transactions that can generate hundreds of millions in revenue from a single deal. This part of the business leverages the bank's vast network of wealthy clients and institutional investors, connecting those who need capital with those who have it. Finally, Swiss banks, like all banks, make money from the traditional business of lending and taking deposits, but on a much larger scale. They provide loans to their wealthy clients, often using their investment portfolios as collateral, a practice known as Lombard lending. They also engage in proprietary trading, where the bank uses its own capital to make bets in financial markets. While this can be extremely profitable, it's also risky. So, the modern Swiss bank is really a diversified financial machine, earning revenue from advisory fees, transaction fees, and investment returns, ensuring profitability that goes far beyond simply charging for a secret vault. In a world that is more interconnected and transparent than ever before, you might wonder, why does the allure of Swiss banking still persist? The famous secrecy laws have been softened under international pressure, with Switzerland now agreeing to share information with foreign tax authorities under certain agreements. Yet, the world's wealthy continue to entrust trillions of dollars to Swiss institutions. The reason is that the brand is no longer just about secrecy. It's about a deeply ingrained legacy of stability, expertise, and trust that has been built over more than 300 years. This reputation is arguably now more valuable than the secrecy laws ever were. The cornerstone of this trust is Switzerland's unwavering political and economic stability. The country has not been involved in a foreign war for over 200 years. Its government is stable, its legal system is reliable, and its currency, the Swiss franc, is one of the world's strongest and most stable. In an era of geopolitical uncertainty, volatile markets, and unpredictable political shifts in major world powers, Switzerland remains a beacon of predictability. For an individual or a family with generational wealth, this long-term stability is the ultimate assurance that their assets will be safe, no matter what happens elsewhere in the world. Furthermore, Swiss banks offer an unparalleled level of global expertise and service. They have been managing international wealth for centuries longer than most competitors. This gives them a deep understanding of complex cross-border financial issues, from navigating different tax regimes to managing investments across multiple continents and currencies. Their client advisors are known for being highly trained, discreet, and focused on building long-term relationships. For a wealthy client, this isn't just a transactional relationship, it's a partnership with an institution that has a proven track record of helping families preserve their fortunes through depressions, wars, and market crashes. In conclusion, the story of Swiss banking is really a masterclass in building an enduring global brand. It began with the simple promise of a safe place to hide from chaos. This was then legally fortified with a powerful code of secrecy. But as the world changed, the industry evolved. Today, while discretion remains a core value, the pillars of the Swiss banking reputation are its unmatched stability, its global financial expertise, and the profound sense of trust it inspires. People use Swiss banks not just to hide their money, but to protect it, grow it, and preserve it for the future, backed by a country that has made stability its most valuable commodity.